Okay, folks, and we are live. Welcome to Sunday Night Futures Live. I hope everybody had a great weekend. We have a lot to talk about tonight, a lot to do with the Federal Reserve's comments, or Jay Powell's comments out of the Jackson Hole Summit, which was held on Zoom on on Friday. Falcon, how you doing, buddy? Welcome aboard. We have a lot to talk about, so let's take a quick walk through the opening price action here. We're going to kick things off with the Nasdaq opening futures action. We opened up. We're flat. We're flat. I'm going to try to reserve some time at the end of the video to try to go back and see how we settle out the first hour. So let's scroll through these. Let's see. I'm going to set up alerts here as we go along, just in case things go bonkers, as sometimes they do. Okay, so we'll get alerted if we break to new lower lows on a 15-minute time frame. Larry, hey Larry, on board from Louisville. Another hot, steamy. You know, it cooled off here, man. It was really hot on Friday. Then it really lightened up. Abel, hello. Joseph Gardner, hello. Will, hello. Franklin, hello. Yeah, we're gonna have a good week, Franklin. I feel it. I think Friday was a real turning point on our core positions, which is that inflation portfolio. We're going to talk about that in a moment because there's inflation everywhere. I'm going to show you some stuff tonight that's really going to get your interest about even what the Federal Reserve is thinking, although they don't want to talk about it too much. I have the evidence tonight. So let's move on here to the S&P 500. Keep in mind, as we're looking at these charts, overall, it was a very strong day on Friday. To expect a flat open or a pullback, no big deal. The S&P 500 is flat. We were higher. We're now pulling back slightly. Let's just set up an alert here. Okay, and we're good. Let's take a look at the Russell. We continue to have a short position on here. The Russell, frankly, ripped my face off on Friday, but we are still stuck in a very long term trading range on the Russell. Okay. All right, so our alerts are set for equities. We're flat. You know, let's call it what it is. We're flat. And that's really not all that bad after the price action that we saw on Friday. Taking a quick peek at the US dollar, which was decimated. Don't pay attention to this percentage move lower at current. That's inaccurate. The price is accurate. The percentage down is inaccurate. That'll update in about an hour or so. So the dollar attempted to rally, a little bit of a fade here. And we want, for our inflation portfolio to work, we want that weaker US dollar. I mean, on Friday, we just, yeah, we have a couple of short positions on, and they did not work for us on Friday, but our inflation portfolio just ripped through the roof. And that was all because of the decline in the US dollar. And I expect more of that in the short term. Franklin, Bob, keep an eye on oil since the hurricane. Yeah. They shut down a couple of pipelines, Franklin. Yeah. Very, very good point. We'll take a look at oil. Paul, hello. Hey, Bob. Where do you think the SENS is heading next week? Continued growth. SENS, is that an individual stock, Paul? Let me know and I'll take a look at it for you, okay? All right. Since Franklin brought it up, it's a very, very, very important point that we have a massive hurricane moving up through Louisiana. That's 20% of our oil production. So let's take a quick peek of what's going on. We'll take a look. Oh, my. Wow. Light sweet crude. Look at that rip. It's reversed. But I think we need to take a look. This is a 15-minute chart. Let's take a pullback here and take a look at a 4-hour view. Obviously, a lot of short covering here. Folks, I'm getting an error message from YouTube about, I don't know, the not enough video maintains smooth streaming. I apologize for any inconsistencies in the video, but I really have little influence over that. So my apologies. Let me know if anything's happening on your end, a gap or buffering, what have you. So oil is seeing a short covering rally. We were higher. We've come down a bit, but light sweet crude is up over 1/3 of a percentage point at current. I expect this to rebound because right now the markets are dealing with the unknown, and the unknown tends to allow for extremes. So expect higher highs here on light sweet crude. Moving on to gold, which just ripped on Friday. We knew this though, right? It was a couple of weeks ago. I drew these orange lines. I think it may have been last Sunday. And I said, be careful here. The gold miners are getting hammered. Right? We're long of the gold miners. We're long of the silver miners. They were getting hammered. And I said, there's something wrong here. Remember this sell-off. And I knew it back then. I said, this is manipulation. They're blowing out all the stop loss orders. They're forcing margin calls. And what happened? We are now above where we were back Sunday, the 8th of August. Think about it. This bloodbath, now we're back above it. And I warned, and I drew these two orange lines here. Look at the complacency. Look at the orderly consolidation of gold despite the ruthless sell-off in the gold mining stocks with the strength in the US dollar. And look at us now. Look at this massive, massive move here. And I think that we're only going up higher here on gold. And I'm going to go to more of that, to what the catalyst is in a moment. Sina, hey, Bob, what is the result of a probable tapering? All right, so Sina, that's a really good question. We've already seen it. You've had your tapering. That's the sick and scary part. This all began back in late May, early June. And that's when the gold stocks took it on the chin. Gold took it on the chin. All commodities started to correct. Why? Everybody expected taper. That was supposed to be Jackson Hole's rallying cry. The economy is great. We're doing wonderful. And we're going to start the taper here. More on that in a moment. So gold up at current. I expect this to continue higher. Might we pause, consolidate? Sure. But I think we're heading up higher here on gold. Let's go to silver, of which we are also long. Silver flat on the session. A very powerful 4-hour reversal bar here. very tight Bollinger Bands, which are widening out to the bull side. I think that silver's going a lot higher here. Palladium, higher lows. This doesn't look wonderful, right? It doesn't look great. If you take a look back like this, right, this does not look wonderful at all. But when you take a look at what's going on here on Palladium, what are we doing? We've stopped going down. We are now putting in higher lows and now higher highs. We're beginning to find a bottom here. So PAL, I believe PAL is the ETF to play here. Palladium is looking better. It's taken a hit. But commodities, folks, look at the Bloomberg Commodity Index, the Goldman Sachs Commodity Index. They all did very, very well last week. Let's take a look at platinum. Platinum. 4-hour chart. These will all be 4-hour charts unless I say otherwise. Let's do this first because we had a breakout, then a failure here. We recaptured. So platinum, sorry. Platinum is breaking out. 4-hour time frame. Beautiful chart here. Moving on. Natural gas. I can honestly say I called this bottom months ago. And we are ripping. I mean, we're ripping. We're up 2% right now. Of course, this has to do with the hurricane out of the Gulf. But let's face it, this has been going on for a long while. Let's pull back to a weekly chart. We were talking about a breakout on natural gas back here. Look at it now. Symbol here, if you like it, BOIL. That's a leveraged ETF. You don't want that much volatility, which I understand. Use the UNG. Remember Thursdays. Thursday, I believe it's 10:30 a.m. Eastern Standard Time. You get your inventories report. A lot of volatility coming off of that report. Beware. But natural gas looking very, very strong. Back to a 4-hour chart. The 10-year Treasury note. If you're seeing higher highs here, that means yields are getting pushed lower. That's good for tech, bad for the banks, although banks did very, very well last week. I like the banks. Agriculture, wheat, opening down here. But let's face it, if you take a look at a weekly chart, last week, wheat had a very nice week, an inside week. It took a clubbing the week prior. We're setting up here for a cup handle formation. May not happen this week, may not happen next week, but I think wheat is moving up higher. This is all the inflation trade. Feeder cattle. I got to tell you the truth. Truth be told, I couldn't tell you the difference between a feeder cattle. I don't know whether they graze, whether you eat them. I have no clue. I just look at the tickers here, and I know they're protein, okay? Protein. Protein is doing very, very well. Feeder cattle, this is a weekly chart. Look at this rip. You want to pull back to a monthly chart, get a load of this. We are at highs not seen since 2015, thereabouts, and we're only going higher. Look at this consolidation. This is a daily chart. That's why I'm losing it. Monthly chart. Here we go. We are at highs not seen since back here in November of 15. We have broken out above massive, massive resistance. We have a beautiful long-term consolidation. This is going up higher, folks. Inflation, inflation, inflation. It's all over the place. We've been talking about this for months and months. It's here. It's happening. What else do we have? Home heating oil. All right, so I arbitraged my home heating oil. Was it last week? Half. I'm glad I did because the shares rebounded. I should have gone whole. I didn't. I laid up. My bad. But home heating oil is rebounding on the month. Look at this. Look at this. This is a beautiful chart. Yeah, we're still down. But look at this. We're nearly going to close positive on the month. If we close positive, we're breaking out to new higher highs on home heating oil. I don't want that. Look at this gap up tonight. This is nuts. This is bananas. We're up over 1.5%, right into resistance. Should have got that full tank. All right. What else we got? We did light sweet crude. Franklin, that was. Silver. Equities, we have our alerts set. We're good to go here, I think. Oh, copper. Copper, really big rebound here on copper. We're nearing resistance. Here's the macro view. We'll go to a weekly chart. Here's the weekly chart, folks. Look at this W formation. Here's your left side pivot point, right side forming. Copper is probably going up a lot higher. Commodities, which goes into everything that we need to live, they're going up higher. So, I'm going to talk more about inflation in a moment. Let's go to comments. Audio good, fuzzy picture, really? Well, it's my face, so... Oh, the chart. All right, so... There is a problem with the audio. Let me see if I could fix that. Audio I've gotten better with. I just want to make sure my equipment's set up properly. Yeah, that's correct. Bear with me, folks. This won't take long. Audio. Let's see if this works. Is the audio better now? Hopefully so. Okay, let's continue on. I'll wait for your answers. I'm very curious. All right, let's move on. This is all very slow tonight, so my apologies, folks. Let's take a look at a couple of charts here. Normally, I don't begin with IWM or the Tues. Now, I want to address something. I had a couple of engagements with a couple of other traders on Friday, and they posted comments in my forum about on our Slack channel about me being short the market. And I know one of them is very, very short-term options trader, trades front month, front week contracts, so very aggressive trading-wise. He does quite well, but I think I need a little bit of validation. So I went out to the Hamptons this weekend, and I met up with a couple of friends, and I had asked, the perception of what they believe I am by watching my commentary when they do watch it. And one guy watches quite frequently. He was like, on the Sunday night ones, you talk negatively about the markets because you bring up the price of the market, how overvalued it is. So there's a possible perception there that you're net short the market. And he's a good friend, known him many, many years. I said, thank you. But I'm not. I'm not net short this market. Do I have a short position on? Have I had it on for quite some time? Sure. IWM and the Tues for quite a while. The IWM, we've been short for several months now, and the Tues we have been as well. The Tues I got short of because you saw yields moving up higher. I thought that the Tues were going to break, and they did begin to break, but they rebounded as yields pulled back. So just to make it clear, I am not net short this market. I am not net short this market. I am very, very long of this market. And in fact, we were about 20% short the market as of, I forget when I put on Riot Blockchain. I think it was last week, early last week. And that brought us down, back down below 20% short the market. Net, we're very, very long the market. And frankly, some of our buys are a lot better than Kathy Wood's. We bought Coinbase. We bought, what else? Airbnb, a lot lower than where she bought it. So, you know, the feedback I was given about, you know, these commentaries going into a Sunday evening was, you know, to give out a thought of where I believe the market is going in the coming week. And I could do that, but I guess it's an issue with my own messaging, and I accept that. We can always improve, but I believe that this market is going up higher. I think it's going a lot higher. And I was not of that conviction this time last week. Now, keep in mind that this time last week, the IWM, of which we had been short, had broken multiple support levels. And oddly enough, my critics, I didn't hear from them. I didn't hear from them until Friday when we get a rally back on the IWM. So that's just the way it works. I'm a public figure. That it happens. I get it. So I'm a big boy. I can take it on the chin. I prefer more cordial conversation rather than stone throwing, because I wouldn't do it to you. I don't expect it done to me, but people, you know, that's the character of some people. So am I worried here about the IWM breaking out higher? Yeah, I am. I am worried about it. Would I go adding to my short position? No way. I would not go adding to my short position. We broke out last week. And if yields break out soon, well then, that means that the small caps will probably break out as well. That will not be a good trade. And if you take a look at the small caps on a monthly time frame, and I went over this with members on Saturday on the week ahead commentary, what you're looking at here is a bullish key reversal bar on the month. So am I going to be married to a trade where I believe that, you know what, I went public with saying that it's short, that I'm short, and I believe that it's going to go down for X, Y, and Z reasons. And in a normal time, you know, we went short back here as we were trading above the third standard deviation Bollinger Band and severely, historically, well extended beyond the 48-month moving average. In any other given time in history, this would have collapsed. It didn't. It didn't, but we're in a different time. We are in uncharted territories, and I acknowledge that. I acknowledge that. So we are still net long of the market. We got more long last week. We're building out our inflation trade to now include more cryptocurrency. Not long of Bitcoin or anything like that. More of the vertical plays, the Coinbases, the Riot blockchains. That way, we are getting more long of crypto, because I don't know who the winner is going to be in the end. So anyway, I wanted to address that. We are still bullish on the market. And why are we more bullish on the market this week versus last week? Let's go to it. I spent a lot of time, granted poolside, this weekend. And these are the comments out of Jackson Hole, the Federal Reserve comments, Jay Powell's comments. And what I did here is I spent a lot of time going through keywords. Words as a trader that I'd be interested in look at the settings. Oh, Joseph, the audio's good here. Paul, good here. Audio's better. Look at the settings on your computer. It should allow you to pick your... Yeah, Frank, I'm using a connection to YouTube, so it's not like a Windows-based thing. I think I've shown it before. It's this here. This is communicating with YouTube, so all the functionality really bypasses Windows and it goes to directly YouTube. So this has to be accurate more so than my computer. So it's telling me that my microphone is accurate, and my other setting for a microphone is accurate here. So, and the alert, the warning I was getting earlier, actually it's still there. No, it's still there. It's still there. So my apologies if the audio or the video is not good. It's out of my control. So my apologies again. All right, so the keywords coming out of Jackson Hole, and I printed them out here. So I mentioned earlier that I've debated how I'm going to approach this. I think I'm going to go with how I decided on earlier. Going into the Jackson Hole Summit, which was held virtually on Friday, the expectation was that the Federal Reserve was going to taper. They were going to say it. This is how it's going to be, blah, blah, blah. Taper this. Here's your time frame. And the reason why the markets rallied was because, they didn't get what they expected. Let's walk through it. What did the Federal Reserve talk about? Let's walk through some keywords here. The top keywords. Inflation. Mentioned 103 times in the closing statement. Second most popular. Employment. Mentioned 31 times. They're not happy. This is their excuse to keep rates so low. COVID. Mentioned 4 times, one of which is in the heading, to be fair. But COVID is another excuse. Employment, COVID. Employment, COVID. So I said, okay, let's play this game a little bit longer. Let's see what else they're going to lay the blame at. Recovery. Mentioned 14 times. They pat themselves on the back. Recovery's going great. We're doing wonderful. But we're still not happy. Why? COVID and employment. So then I said, okay. I want to add more to my gold positions, short positions maybe. I want to add more to my gold mining trades. So what do I want to know about? I want to know about taper. Taper. Sorry about that noise. I hate that noise. That's Windows. Taper is mentioned 0 times. 0 times in the highly anticipated 22-page statement released by the Federal Reserve. Taper was mentioned nada. Never. Never. So if you wonder why I am more bullish this week on stocks versus last week, look no further than their own statement where they try to guide the markets into a taper and they didn't pull the trigger. They wouldn't do it. Some recovery. And for those not familiar with taper, to diminish or reduce. They didn't do it. And they're not going to do it. Remember that the number 1 word in their statement, their keywords, was inflation. And they want to say, you know what I didn't look at? I did look at it. I didn't write it down. Transitory. Mentioned 5 times. So that is number 3 in the keyword search. Transitory to mean temporary. This is U.S. domestic auto inventories. This chart goes back. This is such a great chart. This goes back to 1967. We are at lows not seen since 1967 in auto inventories. We have a semiconductor shortage. Does this look like it's going to get any better anytime soon? I think not, especially if the Chinese go towards Taiwan. Economic data. Going into the new trading week. Monday, not too much going on, pending home sales. That's more of a regional issue right now. Florida, I would love to see this pick up down in Florida. I'm looking for a property down there. I think that one of the reasons why Florida, some of these other territories are so on fire is the lack of inventory. So I'd like to see more inventory hit the market. With the Delta variant, I don't know if that's going to happen. Tuesday, home prices. We'll see whether or not we still have more inflation in the home sector. The Chicago PMI, Purchasing Managers Index on Tuesday. Also on Tuesday, 10 a.m. Eastern Standard Time, CPI, Consumer Confidence. Now, here's where things get really, really dicey, folks. Remember, the number 2 word out of the Jackson Hole J. Powell statement, employment. So how I'm reading into this statement is this. They prepped the decks. They acknowledge there's inflation. However transitory, they acknowledge that there's inflation. Even their own PCE indicator. Take a look at this. Core CPE, this is from last Friday. Inflation hits 30-year high. This is their favorite measure of inflation. Forget about CPI. So what I think they're getting us ready for, and this is why I'm even more bullish on the market this week than last, besides the fact that the Federal Reserve, it's like Lucy with Charlie Brown in the football, right? She tees it up for him, and he tries to kick it every single time, and she pulls the ball away. This is where we're at. This is where we're at. So my guess is that the employment numbers are not going to be wonderful this week. So they prepped the decks. They acknowledged inflation, the hook they're going to have to keep rates very low, despite the fact that inflation is ripping through the ceiling. Oh, we're not happy with employment. Despite the fact that we're at multi-year lows on unemployment rates, they're not happy with it. So they're gonna keep rates where they are, or at some point in time, my guess is they're gonna go lower. So on Friday, we have the Pimp Mac Daddy of them all. That's the non-farm payrolls, folks. And don't just look at non-farm payrolls. Take a look at the average hourly earnings. You're seeing credit increase. You're seeing inflation increase. Will you see people make more money to make ends meet? Going to be interesting. I skipped over Thursday. Initial jobless claims. You always want people to go back to work. Unit labor costs. This is going to be a revision for Q2, if there is a revision. Factory orders, important. Core capital goods, important. We have a very, very heavy economic data-driven week coming up. The earnings reports are over for the most part. So we're going back to a market that is going to be driven by the Federal Reserve and the clown show of talking heads coming out of the Federal Reserve and, of course, economic data. We're going to have the Shiller PE ratio that was updated on Friday. I got to be honest with you, at this point, we are at highs not seen since 2000. Given the fact that the Federal Reserve has done what they have done, meaning we're not doing anything, you're on your own, abandoned ship, I think we're going to take out the highs of 2000. It's just that distorted at this point. So, members, we're going to be seeing a change to the portfolio moving into this new trading week. And assuming that we don't break down to new lower lows, which I don't think that we're going to. The Buffett indicator. Last week was the first week in several weeks where we had seen a decline in the Buffett indicator, and it went down to 2.8. This week, we're back up to 2.9. Strongly overvalued on the Buffett indicator. Look at how far extended we are beyond the historical trend line here on the Buffett indicator. It's just, I'm at a loss for words at this point in time. The yield curve. We haven't spoken about the yield curve in a while. And the yield curve had become very, very overbought. And now we are beginning to find a bottom here on the yield curve. The yield curve is the blend between the 2-year Treasury note and the 10-year Treasury yield. And it looks as though we are going to begin to resume this uptrend. Equities could still do well here, but as this uptrend begins to resume, if it does resume, as it looks as though it will, this is a monthly chart, the month is almost over, you're going to want to look away from your tech stocks, look towards your cyclical stocks. I love the banks. I think the banks are going to do very, very well. So, margin debt. I was asked about this, and this was pushed to me. Does this matter? Yeah, it matters. It's mattered in the past, but it's only going to matter. This is the margin debt is in white with the S&P 500 in blue. Technically, when you get the retail investor topping out, that usually marks the top of a market, but this could take a while. So I'm not going to be here saying doom and gloom, go running for the shelters yet. Normally you get a double top. You had it back here, 2015 to 2019. That bull run, not so much back here. That was a shallow double top. You had a rounding top here in 2010 to 2014 top. This is the financial crisis. That was just a cluster F. Back here in the dot-com days, you had a double top. So I wouldn't put a huge amount of concern into this potential rollover here until such time as we rally back, put in a lower high, and then break to new lower lows. If and when that occurs, that's going to spell a lot of problems for the S&P 500. This is just a cautionary tale right now. COVID bailouts have nothing to do with COVID. I agree with that. I'm going to skip all this. And he put a comment down here. Hopefully I could find it. Basically, the conclusion here is that when you see an end to COVID, COVID is the Federal Reserve's best friend right now. Remember, COVID was the number 4 top keyword, number 3 top keyword in the Jackson Hole statement. It's their friend. It's another linchpin that they could say, you know what, we don't know what variant's coming down the road. We got to keep pumping money into the economy. The worst thing that could happen for the stock market right now is for COVID to go away, because what else is going to take the place? I'm sure they'll come up with something else. But as it stands right now, what else is going to take the place of COVID for a reason why the Federal Reserve can't move on raising rates, or at least tapering? Let's do some chart requests. Oh, thanks, Franklin. I got your message. Thanks, pal. All right, let's see what we got in the members area here. Guys, if you have any symbols you want me to go over, let me know. We have about 20 minutes to go. Boeing. Pins for David C. Let's do this. BA first. I want to go with the monthly charts tonight because we only have a couple of trading days left in the month. Let's get rid of this one. There we go. And let's reestablish some redoing them here. All right, we're having some technical difficulties here. All right, I'm going to restart this. There we go. Okay, good. All right, so monthly chart, Boeing remains in a downtrend. I love the 190 mark. What's the low of the month so far? 210.94. Not quite. We're holding 218, which is critical support. Let's drill down here. Weekly chart. An inside week, last week. No new high, no new low. What we may be setting up for here is a W formation. All right, so here's the pivot point of that triangle formation. Let's move this up higher. All right, they're not going to do it for me tonight. What's going on here tonight? 241.10 is the pivot point. I think this could be bought with a tight stop right below. Let's call it 214 per share on Boeing. But I would stay very small. Daily chart. Daily chart. This is the value, folks, of the automated trend lines. Oh, for those folks not familiar, TrendSpider, 35% discount code below. 7-day free trial offer. Let's bring that trend line back up. And you can see that on Friday, we broke back out above resistance. Not one resistance level, but two. And they correlated perfectly on Friday. Boeing is looking good here. I would love to see a retest of this breakout point. And we're good to go. Boeing is shaping up here. Yields. If yields press up higher, the perception that the market will read into that is that the economy is growing. And that should help Boeing. Especially if you get that feel for a reopening trade, Boeing should do very well. Pins for David. Pinterest. Monthly chart. I think they had a bad earnings report, if memory serves me. Support 52.48. We bounced off of that. Right where these rising moving averages are at on a monthly time frame. Weekly view. A good week last week. We've stopped going down. Volume a bit light. Daily chart. It looks as though we're in a consolidation range here. I mean, I'm not seeing a compelling reason to go running in and buying pins right now. We are what appears to be putting in a higher low here on a daily time frame. I think what we need to keep in mind is that we shouldn't be paying attention too much to a daily chart. We should be looking at how we close out the month. We only have 2 trading days left to go. How do we do this week? Are we shaping up on a weekly and monthly time frame? And then if we could say yes, we're shaping up on a weekly and monthly time frame, then we could focus on the daily chart. I'm not quite with it yet. I like the fact that we have a multi-week consolidation here. It looks as though it's probably going to head up higher, and that's a good thing. But we're still down on the month. Let's see how we close out the month. 2 trading days. It's not too much to ask for to see how we close out the month. Disney. They rebounded big time on the month. All right, so we're up now over 1.5%. We have broken out on a monthly time frame. Volume's going to roll in below average. Weekly chart. We're holding a breakout point. Volume was very light last week. Daily chart. Monster day on Friday. I mean, this is a bullish engulfing day. Volume was good. So the chart is shaping up here. You know, if you, I'm not one to chase stocks. I would love to see a retrace back down to 178.28. In that ballpark, doesn't have to be exactly on the dot. But the chart is firming up here. It's looking pretty good. Earlier in the month, it was not. Here's the value again. Automated trend lines, take them off, put them on. It would have shown you the breakout. Now what we're doing is we're putting in a higher low. And in fact, we have broken out to new higher highs now. Disney, communist management, but I like the stock. It looks pretty good. You're welcome, Chinner. Anytime, pal. Fubo. Not much going on a monthly chart. Daily view. Looks good. All right, so the first thing I look at when I see a chart like this is a higher low. I always want to see that. I want to see a higher low. If I want to get long, obviously. We're very close to breaking out here on Fubo. I don't care about sensitivity. All I care about is a closing breakout. I don't know their fundamentals or when they report earnings, so just keep that in mind. You'll want to know that. The weekly chart is looking good. I would also take a look at the short interest here. Do you have a heavy short interest in the stock? That'll help you if and when we do break out to see a more dramatic move up higher. Daily chart. A really nice day on Friday. We saw a bullish key reversal bar off of 2 support levels. The chart's looking pretty good. I think we're probably going to break out fairly soon on Fubo. ATVI, Activision. I can tell you right now on a daily chart, Activision's looking pretty good. Again, using the automated trend lines. Higher low. Here's your resistance up here at around 82.43. Let's take a look at the monthly chart to see where we've been. Looks good. Holding support. $82.43. About where we closed on Friday. Very, very critical support. Weekly view. Yeah, this looks good. No reason to get aggressive here, but you have your higher low. There's your resistance level. They tried to take it out last week. They failed, though. Volume rolled in heavy. So it looks as though you still have some heavy hitters out there that are long, and they're selling strength. So just beware of that. Now, as I mentioned earlier, the daily chart is looking pretty good. We broke out on Friday. We have more resistance up here at 83.28. But it looks as though ATVI has seen the lows. And if we close out the month strong, we're probably going to see a very good month in September. Let's check out seasonality. This company's been around for a while. 14 years is good. We'll go with that. September's a pretty good month, up 62% of the time. October, not so good, up only 38% of the time. So just be forewarned, seasonality. Good September, not so good October. All right, what else do we have? Abel, hey Bob, I know you're not a fan of Chinese stocks, but would you kindly do an update technical analysis of the chart of BABA? Sure. Yeah, I'm not. It's probably never going to happen that I become a fan of BABA or any other Chinese stock. Now, going into last week, I was actually bullish using options, a defined risk trade on Alibaba. And the only reason why that is that we went into the week last week with RSI at around, it was like 19.98, just barely made it below 20. And I said, you know what? If it makes it down to our support level down here, I would be willing to open up a long trade using options. But they gapped it up early last week, and I wasn't going to chase it, that's for sure. So Alibaba, if you're looking at it from a monthly time frame, let's take the automated trend lines off, put them back on. We bounced off of historical support. We do have another support level above at around 161.41. Volume very, very heavy. Weekly view. Get the log off. The weekly view, it did not close great last week. I mean, they rallied it, and as expected, they faded that rally. So that being said, we did manage to hold on to not one support level. We defended two support levels. We gave up one as well last week. So, you know, this is a dice roll, right? And you're dealing with a Chinese company, and I love Chinese food. I love Chinese people. I don't like the CCP. So, if you're playing a dice game and it's Chinese dice, the dice are loaded. So beware here. I would not trade this stock until it came back down to where I have my alerts set. Then I would look to buy if it was extreme oversold levels, RSI, daily time frame below 20. I would be interested. Right now, that oversold condition has been taken off. Where's RSI now? Yeah, it's just shy of 30. So this to me, I'm not interested right now in Alibaba. That was a trade that has left the station now. So what you might get here is a higher low. But it's a dice game. It really is. I mean, were this a American stock? Do I see a trade here? Yeah. You can open up a position, but use a stop loss right below the lows of August the 23rd, because if it breaks those lows, you're coming down here to 148.53, and there's a good chance that if you get selling momentum behind it, you're coming down here to 130.04. So it's a dice roll. I wish I could be more optimistic about it, but I can't. I just don't like these stocks. Now, there was another one out there, NEMS. I'll find it. I'll sing for you guys. SENS. There we go. SENS. SENS. Daily chart looks good. Oh, this is a monthly chart. Okay. Monthly chart looks really, really good. Just want to absorb it for a moment. Higher lows abound. You have a breakout on RSI monthly time frame. 2 trading days left to go. A lot can happen. Weekly chart. Very nice breakout last week. The play here is a retrace. Could be intraday. No big deal. Back down to support. And we'll keep it active for a couple of weeks. So that support level would be on or about $3.83, thereabouts. Daily chart. Oof. We broke out on Thursday, pullback retest on Friday. Good looking chart. Really, really good looking chart. I like it. Bullish on SENS. Let's take a look at the futures. How have we settled out? We'll go with equities and gold. Still flat on the session. Let's go to a 15-minute time frame. This is just a consolidation for another move up higher. Gold. Consolidating. The Russell 2000 remains down. I think it's moving up higher. And I'm short and I'm saying that. Nasdaq 100. To Nasdaq 100. I want to see what bonds are doing. Yeah, there's a bit of a problem here for the Nasdaq. Remember that what we're looking at right now is the 10-year Treasury note. So if the 10-year Treasury note begins to move up higher, that means yields are moving lower. That's bullish for technology. But if that changes and bonds sell off and yields pull back, the Nasdaq may get a correction. But right now, with regard to the Nasdaq, I think that we're probably going to move up higher. The only thing that's throwing me here, and this is only a 15-minute chart, is RSI. A little bit weak, but it's only a 15-minute chart, and we're consolidating. I think ultimately, folks, we're breaking out on equities. We're going to move up higher. And the reason being, the Federal Reserve is acknowledging inflation. They're saying it's transitory. There's nothing that we have that could prove that it's transitory and that they're not going to do a darn thing about inflation. They're going to blame COVID. They're going to blame employment to keep the party going. If and when you see COVID restrictions open up, COVID becomes less concerned, then you want to get concerned about this market. Till then, it's going up higher. Sorry. With that, folks, everybody have a very, very profitable trading week. Thanks for joining in. I really appreciate the engagement. Smash that like button. And everybody, again, have a profitable trading week and be well.